So I know you mentioned something about like kind of the OGs and maybe people in the past or years ago didn't participate in the tax or understand that it was going to be taxable. And that's probably one of the questions people ask is how does the IRS know, right? And can you kind of explain the different ways?
Yeah, good question. I actually wrote a post about it because this is a question that people are kind of afraid to ask, like in public. But anyway, here's the answer for that. There are a few ways that the IRS knows you have something to do with crypto. So number one, so if you ever receive like a tax form from an exchange, it could be a form 1099K, 1099 miscellaneous, 1099 interest, any type of tax form, that means IRS knows that information because that exchange has already reported your information to the IRS by the time they produce that form. So what I would encourage you to do is go to your exchanges, especially the US ones, go to their tax center or like settings or something and see if you have any tax forms. If you do, that means IRS already knows your information, and if you don't report that information, then you're going to get a notice. And I'm not saying you're going to get into trouble like tomorrow, but they're going to send you a notice saying, okay, you didn't report it because of that. We are going to assess this much of taxes. So that's number one. Um, Number two is by just if you look at your Form 1040, especially starting 2020, they have this question on the page one, and you had to provide the right answer to that question. They ask, have you received, sent, sold, or exchanged or acquired any financial interest? So when you say yes, I'm pretty sure that your data is going to get lumped into some type of database, and they're going to do some matching, and then they know you have something to do with crypto. So that's number two. And then another way is through subpoenas. Like, a few years ago, Coinbase gets subpoenaed. And as a result, they had to release their custom information, including social security number, names and addresses, and etc. So in that case, the IRS could get hold of your information through an exchange. So that's another way. And then lastly, there are a bunch of blockchain analytics tools like chain analysis and cipher trades, and those guys are they have technology to kind of trace these random addresses and wallets into physical people. So if you're not reporting it, and if it's big enough, there's technology for IRS to know that this wallet or address is associated with this person. So those are the four ways that IRS knows you have something to do with crypto.
So do you think the IRS check box is more of a way for them to cross-check data that they might be getting or forcing from the exchanges and to make sure that people are complying or not lying on their return?
Yeah, it's a good question. It is a possibility. Again, they're trying to figure out because right now the IRS doesn't know the number of Americans with cryptocurrencies because if you looked at the Coinbase as one, they're saying they have 43 million users. It could be worldwide, but say that they have 10 million crypto users in the US, and there's a bunch of other crypto exchanges as well. Say that number of crypto users in the US is like 20 million, which is very reasonable. But the problem is the number of returns that the IRS get with crypto transactions are in the low thousands. So there's a huge delta, and then IRS is like, okay, what's happening here? So I think their very first step is to kind of get a good, like a high level understanding of, okay, these are the number of people in the US with some type of crypto affiliation. Doesn't mean that they're going to have to pay any taxes because you could just be hodling, right? But and you don't have to pay any taxes, but they would like to know by adding that question and kind of gathering the answer to that question. There's a number of people, in the US with crypto. Say, for example, they find out, okay, there's 50 million people who say yes, just for that question, and they only get like 1,000 returns. That's a huge problem. So I think that's what they're trying to do.
So I think you mentioned, but how are they classifying crypto for tax purposes?
Yeah, so for tax purposes, cryptocurrencies are classified as a property. Uh, it's pretty similar to stocks and securities. You have a purchase price, which we call cost basis, and you have sales price, which is, sales price is sales price, pretty self-explanatory. And if there's a difference, you pay taxes, which is typically capital gain taxes. So uh, I think the easy way to remember is that when you trade crypto, it's very very similar to trading stocks like Apple or Tesla.